Welcome back to the channel, guys. I'm your host, Buckning, and today we're just going to talk about something that has come up and really has got me thinking about, the impacts of this, I think the good idea about it, but also the bad idea about it. And we'll talk about that. It specifically revolves around what was proposed by the Canadian government around a tax on share buybacks that companies do for the most part. And it's funny because it seemed to have followed when the government in the US announced a similar act or policy where they're doing 1%, but the Canadian government's going to be doing 2%. Now it's not till 2024 based on the projections that they want to do. And then in the US, it's not till coming up this new year. So we'll talk about that, but we'll give you an update on the portfolio first. If you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here, the portfolio today has closed out at $15,060.03, up a whopping, oh no, that's wrong. That is the whole portfolio. Let's just go right into it. The day here, it's closed out at $15,031.69, up $67.92. For the week here, $350.08, up 2.38%. For the 1 month, we're up $838.52. 3 months, down $625.82, down 4%. For the 1 year, down $482.09. And for the all-time since starting this portfolio, we're up $1,275.74, up 9.27%. We got $35.64 in the cash count with $100 not available yet till Thursday when we make a purchase. But yeah, that is the portfolio as it stands for today. One of the other things that have come up for the week here is today's CPI numbers. Not today as in the recording of this video, but when you see this video, which is going to be Wednesday, November 16th, I believe, right? Is it the 16th tomorrow? Yeah, the 16th. Bank of Canada will be releasing the CPI numbers, which is the Consumer Price Index numbers. As we saw last week, the US CPI numbers were down from beginning of January, which did cause a little rally in the market because that is a good sign for most. However, we know that that isn't always the case, and what Jerome Powell is trying to achieve, regardless if inflation is coming down, he definitely wants to underpromise and overdeliver when it comes to those inflation numbers. And so the same thing is going to happen in Canada. However, the CPI numbers in Canada don't typically affect the whole market as a whole, because Canada plays such a small part in the world of companies. And so usually when CPI numbers are bad in Canada, the only people that are concerned are Canadians. The only thing that should be of a concern is the affordability for Canadians who live here. But when it comes to the stock market, it doesn't really play a big factor in the price of a share or what companies are doing. And so I guess that kind of leads into this new proposed tax that the government of Canada is trying to implement for 2024. Funny that they followed suit with the US when Biden had started his policy with the 1% tax on share buybacks. If you don't know what a share buyback is, it's when a company actively buys back their shares from other shareholders, or buys shares off the market to reduce the amount of shares that are in the public, which in return, not right away, but does increase. No, I shouldn't say arbitrarily, but it is arbitrarily increases the earnings per share, which is a level of measurement for how much per share the company's earning. And that's always a good sign for the Wall Street people, for investors, for shareholders, because that just means you own a bigger piece of the pie. And so I don't know why they're cracking down on this, because I think the incentive for doing this in the Canadian government side is to try and encourage companies to invest in their employees or allocate their dollars in different ways other than buying back shares, because I didn't know it was a thing that was frowned upon. Recently, I just found out that it was illegal back in the day, but it is no longer illegal. You can actually do that, and it's it's an interesting thing. So companies will use their free cash flow. So that's after all capital expenditures are paid, employees are paid. This is net profit cash flow. Like, this is why we call it free cash flow. And typically companies will either use that to grow the company, invest in R&D, research and development, or marketing, or other things that really assist the company to grow. Now, we've seen a lot of share buybacks happen, over the years, just because, over this year, just because the share price is lower. It, for most companies, their share price is depressed in that sense. And so it would make a lot of sense to buy those shares back and increase the earnings per share for investors and shareholders. It's a way of returning capital without returning capital physically or with dollars, right? Like a dividend. Dividends, you do have to pay a tax on that. In taxable accounts, in tax-free savings accounts and RSPs, you don't have to do that just because they're tax sheltered. So it is favorable in that sense, but it's also favorable for the taxable accounts because the Canadian government does favor dividends. So what does this mean? This means that companies will have to pay a 2% tax on share buybacks and the value of that share buyback. Now, the issue with that, I think, is I don't think either government, and I'm not going to get too political with this, I don't think either the Canadian government or the US government really has a say in how a company allocates their money. I think corporations like Apple, Google, banks, Canadian banks as well, have a really good grip on how they allocate their dollars, how they invest in their employees, how they invest in developing their own companies and going it in about the right way. I don't think the government should get involved with that because, let's be honest, I don't think I'm the only person that thinks this, but all governments are really poor at allocating their dollars for the most part, and just creates problems, right? And what I mean by problems is this inflation thing is not solely the fault of the government or anything like that. I just don't think it was handled well. And let's be honest, there's a reason why a company like Google is worth $1.2 trillion, which is the national debt in Canada. Roughly, I think we're over $1 trillion in national debt, and that's in debt. Now, for Google, that's not the case. They're worth $1.2 trillion. So let's put that into factor. One company alone is better at allocating their dollars and maybe having 1 year's worth of debt that they could pay off in 1 year's worth of free cash flow, which is pretty impressive. What's the amount of time that it would take Canada as a whole to pay off that national debt? Probably quite some time. I think it's about $33,000 per person, including children, right? And so just take that into consideration. I don't think it's a good idea. I think it's a bad idea. I think it's just another way to get some money out of big corporations. Now, this sounds very familiar to the tax proposal that happened a few months back in regards to taxing profits of big corporations. And for the most part, it's funny because I'm not invested in the oil and gas industry, as we all know, but it seems like these taxes are really targeting those companies. So if you're invested in these companies, it's something you should really maybe look into. And I know for the most part, we don't have much of a say in it as investors. I guess, again, I'm not in the oil and gas and energy sector when it comes to shareholding or investing in that sector, but it's a blanket tax to create another revenue to assist the frivolous, maybe in some opinions, the frivolous spending that's going on in the government. And these are things that we want to pay attention to because, as we know, when you invest internationally, some of the things that you want to take into factor is government policy, How does the government act? How much control they have over corporations, over companies. For example, China would be one of those. Companies, seems like the government has more hands inside the company than the company has control of. And that's not something we would want to see in a democratic country, in a democratic North America, right? Because I think, like I said, I think the company handles it. I think corporations handle it very well on how they invest in their employees, invest in company growth, because there are shareholders. Now, if you're not a shareholder and you're like, yeah, that makes sense, tax the wealthy, maybe you should be a shareholder and then really dive into what a company does, and it'll help you understand, the feelings that companies have, that shareholders have, and really gets you an understanding of how it works. Because I think there's this negative connotation when it comes to corporations who make billions and billions of dollars, who also employ millions and millions of people, who provide you with the income that is needed for you to buy the necessities, to continue living with a living wage, as they would call it. I actually hate that term, to be honest with you. To provide you with a living that you can buy the things like a computer, like a phone, like the tech you want, the things you want to wear, the things you want to eat, because you're trading your time for money, which majority of people do. So the whole tax the wealthy thing, I think, can be silly. I think you just got to learn about those things, and really use it to your own advantage to prosper in a lot of ways. And so don't hate me for saying that, but that's my opinion. And so yeah, that's my take on that. And then consumer sentiment in the US is down quite a bit. In Canada, it is not down. The lowest point that we had in consumer sentiment, and what consumer sentiment is the confidence in the economic environment in the near future. When it comes to the US, it is the consumer sentiment has dropped below even 2008 levels, whereas Canadian levels, we are still in the 55 points area. And so there is still hope in the Canadian market. No one has lost hope, but in the US, it's completely gone, which could mean even more. I did mention this, but what it takes for the market to really drop in that environment is for consumer sentiment to completely go away, to really see the consumer really just give up on the market, and that could help with the rate of inflation and so on and so forth. Now, what kind of video would this be if we didn't talk about interest rates? Because I think this is a good time to talk about the rising interest rate environment. I don't think it's going to stop for a while, even though we will see CPI numbers come out in Canada for when you see this video during the day there. And then in the US, it is, and the interest rates are still rising. And what does that mean for people like us? It's not a bad thing. I mean, people who are struggling to make like mortgage payments or debt obligations now will probably struggle when interest rates go higher. But that's not a bad thing, because to be honest with you, the majority of Canadians, or the majority of North Americans, have seen interest rates in the 7% area, or even the double digits area, back in the 80s and I think like the 70s. And so what difference is it now? We haven't even hit double digits. We're like sitting at what, 5.95% at the Canadian rate right now, bank rate. So what's the issue? I mean, the mortgages that are coming out now are maybe 5-6%, right? And to be honest with you, if Canadians struggle buying houses at 2% or 3%, then you'll probably struggle at 7%, right? So you just have to buy a little bit lesser home. But the thing comes with that is that the less volume of homes being bought will obviously bring down the price, due to supply and demand, which makes it a bit more affordable in that sense. But then we have to qualify at the qualifying rate. So there are factors like that. But that's all I want to say about interest rates. So yeah, that's pretty much it for the video, guys. So don't forget to leave a like and subscribe, and we'll definitely see you guys in the next one. Bye.